And our final guest is Bank of Oklahoma's Financial Chief Investment Strategist, Steve Wyett, with his outlook for 2025. Before we get into any of that, Steve, two things. Is Bank of Oklahoma back in business after the snafu of...
Well, thanks for bringing that up. This actually is a much bigger problem than BOK Financial. It actually impacts multiple financial institutions. It's a big national vendor for a lot of banks.
Well, I was going to say it's not really the bank, it's the vendor.
It's a vendor
that services the bank.
But I'm not totally. I'm not a spokesperson for the bank from that standpoint. My understanding is there are still some connectivity issues, but I know we're working hard to get those resolved as quickly as possible. And appreciate the patience that, and apologize for any inconvenience that's causing any of our clients. I understand that.
But I'll be glad to come over and babysit the money.
Yeah.
Last time you were here, which has been a while, your predictions, and I jokingly bounced off and said, the Democrats did it, but they did.
Well, as we talked a year ago, Sam, and we were looking into 2024, we had really four big themes that we were thinking was going to happen. Inflation was going to continue to come down, and it has. The Fed would begin to lower interest rates, and they did. Now, it took them a while. They didn't start lowering interest rates till September. We thought that economic growth would remain positive, and it did. In fact, we were growing above trend, 3% growth in the back half of the year, and we thought stocks would end the year higher. Now, as part of that, the reason that I said that was it was an election year. And so it really didn't, anytime there's an election year, and it doesn't matter whether it's a Democratic administration or a Republican administration, they're both going to spend money to try and make the economy as good as possible. We spent 10% of GDP in federal spending last year, which is unsustainable over a longer period of time. And the fact is that if we weren't in a recession and we weren't at a time of war, it's just unbelievable that we spent that much money from a federal standpoint. So now, short term, that was a positive for growth. Longer term, we're now $36 trillion in debt, and we're going to have to deal with that as we move forward.
How many times, I'd love to know, how many times you looked at the numbers and said, who's minding the store?
Well, I've been in the investment business since 1982. We've been talking about it since then. I mean, go all the way back to when President Reagan really started building the deficit, and then you had the deficit hawks, and so we've been worried about government spending for a long time, and nothing bad has happened. And we're not in a crisis mode today, Sam. The economy's doing well. In some ways, if you look at how our economy has come out of the pandemic versus a lot of our trading partners, we've done so much better. And so there's a lot of positive aspects to that, but I think that this is where now as we move forward, a new administration, the way I would describe what we're looking at now is we're in a high change environment. There's going to be a lot of things that are changing. We've got new policies coming on regulation, energy, tax policy, tariff policy, and immigration. 5 big areas that could really impact the economy as we move forward. On balance, we're more optimistic than pessimistic, but the implementation of some of these policies and how it's done is going to be really, really important.
I got to tell you, though, the tariff thing kind of concerns me.
Yeah, I probably get more questions on tariffs than anything, and I'll be honest with you, that's not an issue that we're overly concerned about. There's 2 reasons really why that is, Sam. We have a little bit of history. President Trump and his first administration implemented some tariffs on China, and everybody's worried about what that would mean to import prices. And if you just look at import prices during that period of time, they did not go up. So how companies respond, how consumers respond can mute the actual impact of what the tariff is. The other part of this is that we think a big part of the rhetoric around tariffs, it's a negotiating tool. Now, you know how you make a negotiating tool effective? Be willing to do it. And this is where we have the advantage of President Trump's first administration, where he did this. And so think about the 25% tariff that he talked about with Mexico and Canada. That was less about an economic issue. We need them help from a social issue, be that on immigration or be that on the flow of illicit drugs. China's a different issue. They're an economic adversary. And so we do think that there's a better chance that tariffs on China are implemented and could be implemented relatively quickly. When we're talking about our other trading partners that tend to be more allies than not, this is probably a negotiating tool. Think about reciprocity. Think about President Trump has spoken many times about wanting a level playing field. And just as a specific example, in the Eurozone, we import a lot of cars from the Eurozone. Think of all the German cars, Italian cars come in, no tariffs. Every U.S. automaker that ships cars to Europe has a 2.5% tariff on it. Now, it's not a huge number, but they tariff an import for us to send to them that we don't tariff when they send to us. So this idea of reciprocity.
And there's a matter of fairness.
It's just fairness. Now, everybody wants in the U.S. market.
Yeah.
We're the biggest economy in the world. We're doing better than anywhere else. I think the administration is just saying, hey, let's just be fair about it.
Well, let me ask you, we got about 40 seconds. The issue of food, I mean, I hear more complaints about the price of groceries than I do anything. Is anything going on there?
Well, unfortunately, I mean, look, food prices historically are highly volatile. They move up and down quite a bit. Avian flu's really having an issue on egg prices at the present time. But in general, Sam, food prices are higher. And so we talk about inflation getting better, and it is. Aggregate inflation, the amount inflation has gone up since the onset of the pandemic today is about 21%. This is what consumers are feeling. So you and I see it. When I talk to my wife, she goes to the grocery store, I'm carrying 2 handfuls of sacks. It's $250 worth of groceries.
Exactly.
And not just that, you open the bag of chips that you bought and it's 3/4 air. So you get the shrinkflation kind of thing going as well.
And
so
eggs are off the chart.
Well, like I said, that's avian flu, and we'll get through that. But overall, price levels, food, energy, insurance, housing. Your previous guest talking about housing really that's a very difficult topic to solve. But all of this, I'm gonna say this without we're apolitical in our approach. But inflation was a key aspect of why there was a change in the presidential race election back in November. Most consumers were feeling that. They're paying more and they're getting less, and their standard of living had declined. And that was a big reason for the change.
I just want to pay my cable bill.
Well, that too. And then you could cut the cable though, and then you start adding up all of your streaming services, and you end up paying more anyway. So
Get a dish, maybe use a pie plate. Listen, hey, thanks for coming by.
Sam, thank you. I'd love another chance to visit with you anytime.
We'll do it
Thank you.
the road, and maybe sooner than you think.
And stay optimistic. The economy's better than we think. Yeah, stay optimistic.
All right, we're all out of time. Thank you for joining us, and we'll see you next time.